Money has taken many forms throughout human history. It began as shells and metal coins, then turned into paper notes, and later became the plastic cards we swipe every day. Today, a new chapter has started. Money is becoming digital code stored on screens, apps, and wallets. And this shift is happening faster than anyone expected. From Bitcoin to stablecoins to central bank digital currencies, the way we use and understand money is changing everywhere in the world. Digital currencies are shaping the future of payments, finance, and even national power. And if the last decade is any sign, the next few years will bring changes bigger than the invention of credit cards or online banking. This is the story of how money went digital, why it matters, and how it will impact your life. What are digital currencies? Before we go back in time, we must understand what digital currencies really are. The term sounds simple, but it includes very different types of money. The first type is cryptocurrency. These are digital coins like Bitcoin and Ethereum. They are created and stored on public blockchains that anyone can join. No central bank controls them, no government prints them. Instead, thousands of computers around the world verify every transaction. This is why people call crypto decentralized. Anyone can send Bitcoin to anyone else without using a bank. The second type is stablecoins. These are digital tokens like USDC or USTD. They are designed to stay equal to a real-world currency such as the US dollar. The idea is simple. Cryptocurrencies move up and down a lot, but stablecoins stay steady. This makes them useful for shopping, trading, or sending money without worrying about price swings. The third type is CBDCs, which stands for central bank digital currencies. These are not cryptocurrencies. These are digital versions of real national money like the digital dollar, digital yuan, or digital rupee. They are created and controlled by a country's central bank. Think of CBDCs as official digital cash, just like the cash in your pocket, but stored on your phone. These three categories together form the new world of digital money, and each one plays a very different role. How it all started. To understand why digital currencies were created, we must return to the year 2008. The world was facing the worst financial crisis in decades. Big banks collapsed, families lost homes, trust in the financial system collapsed. People felt powerless as their savings and futures were shaken by decisions they had no control over. During this time of fear and confusion, an anonymous creator who called himself Satoshi Nakamoto published a 9-page document online. It described a new kind of money called Bitcoin. The goal was bold. It would let people send money directly to each other without banks, without governments, and without middlemen. Bitcoin went live in 2009 as a peer-to-peer electronic cash system. In the beginning, almost nobody cared. Only a small group of tech lovers, cryptographers, and cypherpunks read Satoshi's idea. People mined Bitcoin on old laptops. At the time, one Bitcoin was worth less than a cent. Discussions happened in small online forums. Bitcoin was not an investment, it was an experiment. But something powerful had begun. For the first time in history, people could store value and move money in a system not controlled by any nation. Over the next decade, this experiment grew into a global industry worth more than $1 trillion at different points. From fringe to mainstream, Bitcoin and Ethereum slowly moved from the edges of the internet into the center of global finance. At first, most people heard about crypto only during big price jumps. Headlines talked about teenagers becoming millionaires or traders losing fortunes in minutes. But behind the hype, something big was happening. Millions of people around the world began using crypto exchanges and digital wallets. Companies started accepting Bitcoin for payments. Ethereum introduced smart contracts, which made it possible to build apps and services directly on the blockchain. Suddenly, digital currencies were not only investments, they were tools for building new technology. Banks, hedge funds, and major financial institutions joined the conversation. Governments studied how blockchain could affect their economies. Payment companies like PayPal and Visa added crypto options for users. What began as a small community now sat in boardrooms of major corporations. The world realized that digital money was no longer a temporary trend. It was the beginning of a permanent change. The rise of CBDCs. As cryptocurrencies became popular, governments started paying close attention. They saw how fast people were using private digital money. They also noticed how stablecoins could move billions of dollars across borders without touching traditional banks. This raised a serious question. What happens when private money becomes more popular than national money? To protect their currencies and keep control of their financial systems, many countries began working on their own digital money. This is how CBDCs became a priority. A CBDC is a digital form of a country's official currency, issued directly by its central bank. It is not mined, not decentralized, and not controlled by private companies. It is simply the next version of national money. Early experiments took place years ago. Finland tested an electronic cash system in the 1990s. Ecuador launched a digital money project in the 2010s. China began researching digital currency long before other major economies. But after 2019, the movement exploded. The announcement of a private digital currency project called Libra pushed governments around the world into action. Today, more than half of all central banks are exploring or piloting CBDCs. According to global studies, CBDC transactions may increase from about 307 million in 2024 to 7.8 billion by 2031. Several countries are already far ahead. China's digital yuan has been tested in transportation, shopping, and even salary payments. India's digital rupee is rapidly gaining daily users. Nigeria's naira has reached millions of active accounts. CBDCs are spreading quickly, and they may reshape the meaning of national money. Why digital currencies are rising? There are many reasons why digital money is growing across the world. One major reason is payment speed. Traditional banks take days to move money across borders, but digital currencies can move money in minutes or even seconds. Another reason is financial access. Many people do not have bank accounts, but they do have smartphones. Digital wallets give them access to money and payments without needing a physical bank. Smart contracts also make digital currencies powerful. They allow automated actions such as rent payments, subscriptions, loans, or salaries that run based on rules written in code. Governments like CBDCs because they create safer, faster, and more efficient national payment systems. They also give governments more visibility, which helps reduce corruption and tax evasion. Together, these drivers make digital currencies attractive for both everyday users and global institutions. Risks, crashes, and controversies. Every new technology brings problems, and digital money is no exception. Crypto markets are famous for their massive price swings. People have made fortunes and lost fortunes in a single week. Many scams, hacks, and rug pulls have taken advantage of beginners. Stablecoin failures have also caused fear. When a stablecoin loses its peg, billions can vanish overnight. CBDCs have their own challenges. The biggest fear is privacy. If governments can track every digital transaction, some people worry that CBDCs could become tools for control. Regulation is another major issue. Different countries have different rules. Some allow crypto, some ban it. Others place heavy restrictions on exchanges. To solve this confusion, global financial groups, including the IMF, are now creating guidelines and policy frameworks. Digital money comes with risk, but so did every major technology before it. How digital currencies change everyday life. Digital money is already changing how people live. In many places, cross-border transfers happen in minutes. People use stablecoins to shop online or pay remote workers. CBDC wallets allow small businesses to receive payments instantly without bank delays. In the near future, salaries, taxes, pensions, and government benefits may be paid directly in digital currency. This reduces paperwork and makes payments almost instant. In some cities, you can already pay for transport using CBDCs. In others, digital currency is used for small loans or micropayments. The shift is slow but steady. One day, paying with digital money may feel as normal as sending a text message. The geopolitics of digital money. The rise of digital currencies is also changing the balance of global power. Countries are racing to launch CBDCs to protect the influence of their currencies. Projects like mBridge are connecting central banks across borders. This could challenge the dominance of current global payment networks. Digital currencies may create a new era of financial competition, where speed, technology, and security become more important than physical cash or paper banking. The road ahead? Hype versus reality. Digital currencies are clearly here to stay, but the final shape of this new financial world is still uncertain. Will cryptocurrencies become everyday money or remain investment assets? Will CBDCs replace cash or simply exist beside it? Will stablecoins remain private or become regulated like banks? There are many open questions about privacy, regulation, and global cooperation. But one thing is clear. We may be living through the biggest transformation in money since the invention of banking itself. So, like the video, share their thoughts in the comments, and subscribe for more simple deep dive videos about global finance and technology.